Hello, welcome to the European Open briefing for Friday, June the 15th. I'm Rafi Boyajian, currency analyst, and we're going to be taking a look at what's happening in the currency markets today. The euro has plunged sharply following the European Central Bank's surprise decision yesterday to delay a rate hike until at least after summer 2019. The dollar, though, is extending its post-Fed meeting gains, but we do have possibility of fresh tariffs against China being announced later today, so that's a risk to watch out for. The pound is following the euro lower amid signs of a fresh rebellion within Theresa May's Conservative Party. Oil prices, though, are steady despite more clear signals from OPEC and Russia that they will increase output at next week's meeting. Let's take a look now, though, first at the euro. We can see that big drop there yesterday after the ECB decision. We did see a brief spike upwards about 1.1840 after the ECB finally announced an end date to its asset purchase program. They're extending the current program from October till December, reducing the size of the purchases from 30 to 15 billion. But what took markets by surprise was then forward guidance in their statement that said interest rates will remain at present levels at least through the summer of 2019. And that's why we're seeing that big negative reaction in financial markets there, particularly in currency markets, the euro dropping to a two-week low, hitting 1.1541 earlier today before rebounding somewhat. It's also sharply down against the yen, hitting a 1.5-week low, 127.68. So that's the euro's worst daily drop since the Brexit referendum in 2016. So despite the asset purchase finally coming to an end, overall, that decision by the European Central Bank yesterday was seen as quite dovish. And we can see the impact there on the dollar as well. Dollar index surging high yesterday and this morning climbing to a 7-month high of 95.13. Dollar yen also sharply up, climbing to a 2-week high of 110.90. So the Fed now is standing out as the only major central bank seen to be hiking rates in the near term. We also had the Bank of Japan policy meeting earlier today, and the Bank of Japan is still in no hurry to start withdrawing from its stimulus program. We heard the governor, Haruhiko Kuroda, saying that it's true that consumer price year on year is slowing, and therefore the Bank of Japan will maintain powerful monetary easing. So the Japanese yen is overall weaker this morning. Yesterday, we did see a bigger than expected growth in US retail sales. So that's another positive factor in the greenback of the past day. But later on, we might see some volatility if, as expected, President Trump does announce that he's going to go ahead with that tariffs of up to 50 billion on Chinese imports. Although the list itself has been reduced, still, nevertheless, that's a sizable amount of tariffs. And on top of that, we're seeing reports that the US is readying a second list worth up to $100 billion on Chinese imports. Let's now move on to the pound. We can see that the pound has dropped alongside the euro. Before that drop, though, the pound had been boosted from stronger than expected retail sales out of the UK for the month of May. The annual rate hit the highest in more than a year, but then sterling fell sharply as it was sold off alongside the euro, hitting a 2-week low of 1.3209. And on top of that, we do also have fresh rebellion within Theresa May's party. Theresa May's compromise on the meaningful vote aspect of the EU withdrawal bill has now been rejected by the pro-European MPs in her party. So this means that when the EU withdrawal bill comes back to the House of Commons next week, it could possibly get rejected this time round. A quick look at the Australian dollar, because the Aussie is In fact, one of the worst performers this week. It's now fallen to 1 month low of $0.7450. That's mainly on the back of the widening yield differential between the US Treasury yields and Australian government bonds. That is deeply weighing on the Aussie. We can see the Australian currency sharply below its 21 exponential moving average. So although we did see some fairly decent data out of Australia recently, the RBA is in no hurry to raise interest rates, and in contrast to the Fed, which continues to raise rates. We're seeing other commodity currencies also coming under pressure because of that. And talking of commodities, oil prices are steady this morning, despite the fact that we're getting more clear signals from Saudi Arabia and Russia that they want to start increasing output. We've got the meeting coming up on June 22nd between OPEC and an alliance non-OPEC alliance led by Russia. Russia wants a big easing of the output restriction. OPEC wants a much smaller easing of that restriction. But oil prices are doing not too badly this morning. WTI is holding near 2-week highs, as it got a boost early in the week from a big drop in US crude stocks. Brent, though, is flat on the week, not doing as well as WTI. A quick look at today's economic calendar. The main highlights later on will be US industrial output and the University of Michigan Consumer Sentiment Index. That's it from me. Thank you very much for watching, and have a great day.